Well, joining us to wrap up the day's market moves is Grant Nader from Benguela Global Fund Managers. Thank you so much for your time, Grant. We've had quite a few labor market data points coming out of the US. Yesterday, we had the JOLTS job openings for October. And then today, we had the ADP private payrolls. And of course, markets are looking out for weekly jobless claims tomorrow and that non-farm payrolls print for November on Friday. But just from what has come out of the labor market so far, what is that signaling about the labor market, the state of the economy in the US, and possibly what the Fed could do next week?
Yeah, I think if you think about what the bigger picture has been, it's been about trying to get on top of inflation, trying to bring it down. Central banks globally have been aggressively trying to manage that down by raising rates aggressively. A lot of inflation has come off, but one of the places where it's been the stickiest and the most difficult to bring down has been in wages. And the reason being, the labor markets are very tight in the US and Europe as well. And that means people have bargaining power in wage negotiations. And so that has kept the spending power and the demand from the consumer, specifically in the US, has been very robust. And that's obviously meant there's some support to prices, and inflation has been stickier in certain aspects. So the last sort of domino to fall that the Fed's been looking for is a loosening in this labor market. Yesterday, we saw job openings coming off, which means, currently they still have about 1.6 jobs for every job seeker. So they're certainly not struggling, but it is weakening, and it's well off its highs of nearly 2 times. And then we saw today that new job openings in the private markets came in at around 100 versus 130 expected. That's very encouraging because, again, it shows some loosening in the labor market. And then the last piece of the puzzle was there were some good productivity numbers, which means that those people who are working are actually being more productive. And that is also something that is inflation positive and or profit positive. So typically it's a win-win situation. Productivity is your first price. So that's almost a Goldilocks scenario. We've seen the futures markets in the US aggressively pricing that in. There's over a 60% probability of the first cut in March next year, which is very optimistic, but the market, more than half of the market is now starting to price that in. So it'll be very interesting to see how that plays out. And it has an obvious knock-on effect into South Africa as well.
All right. Well, as we're talking about the US, I actually want to go into BAT, which has come out with an update today, basically saying that it is still experiencing pressures in the US and the outlook not looking great there for its traditional combustibles products, reaffirming their earnings matching guidance, though, for this financial year. Quite a lot of moving parts as they also talk about the new categories that are due to break even sooner than they expect. That share price did sink over 7%. What is it that gave markets a little bit of a fright here?
Yeah, I mean, I think it's a large disappointment to see this. So they made an acquisition, or it was a merger, but they paid a lot of money as well for Reynolds Tobacco, with some strong brands that came with it 5 or 6 years ago. And now what we saw today is a massive write-down of those assets. So 25 billion pounds in the neighborhoods, or $31 billion. And it's basically them saying, we thought we'd be selling cigarettes through these brands for the next 20 or 30 years, and things would be business as usual. But actually, we were very wrong, and there's a lot less value to be extracted. So that's the negative.
Yeah.
It doesn't affect earnings because it's a balance sheet impact. But on the earnings front, they managed to retain their guidance for mid-single digits. And what is positive, if you want to look on the bright side, is they're bringing down their debt, which means they've got enough money to keep paying this very healthy dividend of well over 8%. They've got money to start buying back shares again, potentially, as they bring the debt down. And then the other important point is the non-combustibles, which is the vape and all these other competitive cigarettes that a lot of the youngsters are taking to nowadays. That's actually a tremendous growth area. But what's happening is they don't have the dominance. None of these traditional tobacco companies have the same kind of dominance in that space that they used to have in the traditional, heat smoking cigarettes that we're used to. So they really need to establish themselves there. That it is a growth area for them. They've brought forward their profit forecast on that by 2 years, which is another positive. But really, these guys are going to have to start snapping up some of these little competitors, or they're going to end up being a much smaller player in the new, bigger market. So it's pros and cons, and it depends on how they implement their strategy over the next few years.
Yeah, very, very interesting dynamics happening there in that tobacco market. Let's go on to car parts and batteries. So we have Nader that came out with a sense today. Quite a number of announcements there. Of course, the big one that the CEO that just came in April this year is ending his tenure at the end of January. Of course, health reasons and not anything that's like suspicious or anything. They also gave us an update on their Ford project, but also their Romania subsidiary being in the line of sight of the European Commission for a potential violation of EU antitrust laws with other manufacturers. What did you make of all those announcements there?
Yeah, I mean, it's a very noisy story, isn't it?
Yeah.
And I think the first thing we have to do is decide whether we accept at face value that the CEO resignation is for health reasons.
Yeah.
6 months after he joined, it's possible.
Yeah.
But there's no clear. I think the timing is interesting coincidence. Let's put it that way. So that points to a little bit of smoke and fire. That would be a concern. And then the EU investigation relates to the period 2004 to 2017, as I understand it, around the battery regulations. The EU doesn't mess around with these things. They move very slowly, but they're very serious about antitrust and regulations. We've seen them come in with significant fines on some of the big tech companies, the Googles and the Metas of the world. So when they come after you, they do come after you properly. It is a concern. I don't know what the substance of it is, but perhaps there's something to be read through in the CEO's resignation. So I'd be a little bit concerned and a little bit careful there if I was a shareholder.
Yeah, and I mean, it is quite concerning because this company has actually experienced quite a lot of headwinds in the last while. Well, let's get to your stock pick for today. Grant, what will it be?
So I'm picking Mondi. It has had a nice recovery off its lows, but it's still relatively cheap relative to its history. Is very well placed to benefit from a recovery in the European and the global growth outlook over the next 9, 12, 18 months. If we see a turning in the rate cycle, which it looks like we are seeing, and we're going to subsequently see a nice recovery, as an investor, you need to look through the short-term noise, and I think Mondi is very well placed to be a beneficiary of that longer-term improvement in the global growth cycle.
All right. Well, thank you so much for your time and your analysis today, Grant. Really appreciate it. That was Grant Nader from Benguela Global Fund Managers.